Today's top story, real estate investing is down 45.8% year over year. More on that in a minute. Hey everybody, Joe Hillner with your Home Sold Guarantee Realty, where we guarantee the sale of your home, or I'll buy it. Every week I share market data to keep you informed of the local real estate market. Here's this week's Boca Market Watch. First, single family homes. This past week, 62 new listings. Pretty good, ranging in price from $425K to a pair of homes listed at $25 million. Nice. 12 homes back on the market, while 57 homes listed took a price decrease and 3 sellers raised their asking price. In a lackluster week with 37 different properties under contract and 30 going pending. 26 homes were unsuccessful in selling and taken off the market or expired outright. In kind of a new normal week with 31 homes sold ranging from $517,000 to $28 million. Next up, condos and townhomes. 97 new listings. That's a bunch, and ranging from $93,000 to $3.5 million. 21 units back on the market, 76 properties with a price decrease, and 10 sellers with an increase. And a little better week with 48 different properties under contract and 42 going pending. 20 condos or townhomes unsuccessful in selling and taken off the market. 46 closed sales this week. That's not great. Ranging in price from $135K to $1.5 million. And here's what's happening right now. Real estate investors are taking a wait-and-see attitude as a result of the mild drop in home prices across some metro areas, leading to a near 46% year-over-year decline in investor home purchases fourth quarter of 22. That according to a recent report from Redfin. The report stated that the higher cost of borrowing money and declining home values had made real estate investing less attractive, with investors opting to move their money into other asset classes that offer better returns. The decline in investor purchases in the fourth quarter was the second biggest on record, with the subprime mortgage crisis in 2008 accounting for the largest decline of just over 45%. However, the decline in investor purchases is not unique to the U.S. housing market. Overall, home purchases fell 41% year over year last quarter. In Florida, half of the metro areas tracked by Redfin saw a larger percentage drop in investors, so over 50%, with a few others experiencing a decline that was about the national average. Nevertheless, all of the Florida metros saw fewer real estate investors compared to the fourth quarter of 21. While the quarterly comparison showed a 27% slump in investor purchases, the largest quarterly decline on record, aside from the beginning of the pandemic, the overall share of homes owned by investors remained about the same. They have about the same share of, or same piece of the pie, if you will. In the metros that were tracked by Redfin, investors purchased 17.8% of all homes in the fourth quarter compared to 17.6% in the previous quarter and 19% a year earlier. So about the same. However, investors' retreat from the housing market might be good news for the individual buyers since they will face less competition from investors. The senior economist believes that investors may start wading back into the market this year, given that mortgage rates have ticked down from their high, and especially if home prices show signs of bottoming out. Investors who plan to be landlords are facing the challenge of slowing rent growth, which is making it more difficult to get significant returns. In addition, the report highlighted that last year's jump in mortgage rates dampened homebuyer demand, of course, making it more expensive for investors to borrow money, which eats into profits. In the fourth quarter, investors bought $31 billion worth of homes, down 43% from $54 billion a year earlier and $43 billion the previous quarter. The typical home they bought was just under $426,000, which was basically unchanged, but down almost 6% from the previous quarter. Overall, the decline in investor purchases of U.S. homes highlights the impact of declining home values and rising borrowing costs. This could signal good news for individual buyers who will face less competition from investors in the housing market. However, that seems to be a narrow window of opportunity. The huge hedge funds have been hoarding billions of dollars in cash, and they're just waiting for what they hope will be buying opportunities in the third or fourth quarter. So if you're thinking about making a purchase, there may never be a better time than the next 3 to 6 months. Think about it. Okay, that's it for today. If you'd like some specific market data on your neighborhood, just send me a text or give us a call, 954-799-6867. If you're watching this on my YouTube channel and you like the info, Don't forget to hit the like and subscribe buttons and the notifications icon, the bell down below. Till next time, this is Joe Hillner with your Home Sold Guaranteed Realty, signing off for now. Go serve big, everybody. Be nice to each other, and I'll see you next week.